Got Nooresh as well as Kunal joining in on the show as always. Kunal, Nooresh, hi, morning. Kunal, 35% of the total weightage of the index was under pressure yesterday. Reliance, HDFC Bank, ITC, ICICI Bank. What's it looking like for the index?
Good morning, Aisha. So yeah, I think that's the conundrum with the market right now, because there are two divergent trends which are playing within the indices, within the overall market trend. One is on the index front. Yes, there is definite amount of weakness on the indices, as well as a good amount of, or a prominent amount of shorting, which is happening into these large cap names, specifically the ones which you've mentioned. But on the other hand, it's not as if the portfolios are bleeding, like what we had seen actually on that single day when the mid cap index had fallen by a couple of percentage points, 2 weeks back. So, we're still into that state where there's a lot of stock specific opportunities to try and initiate maybe fresh long. Stocks are actually seeing breakouts for themselves. There is follow through up move for many mid cap, small cap, tier 2 names. So I think in that regards, one has to be a bit more stock specific over here. Yes, the indices are showing signs of consistent weakness. We are trading below the 50-day moving average consistently over the last 3 days for the Nifty, and I think that could probably spell some concerns on the index trend. So the view is negative on the indices, expecting a further correction even going forward.
Nooresh, what levels are you monitoring on the Nifty Bank, especially given the weakness in ICICI Bank and HDFC Bank, more pronounced in HDFC?
So the main level continues to remain at that 43,500 to 44,000 mark, which is where it has made the lows for the last few months. So overall, HDFC Bank also at 1,500. The major lows for the last longer term is closer to 1,400. The recent lows in March were closer to 1,500, 1,530. So out here, not a major downside, but it's been a slow drift in the banking space. But at the same time, we are looking at an Axis Bank hit a new 52-week high and an all-time high. So the structure of the bank Nifty is such that 40% of the index does nothing, which is where you have HDFC, Kotak, as well as ICICI and the smaller names. And then you have the rest of the 60%, which is where we are seeing strong trends, which are closer to 2 to 5% away from a 52-week high, which is where Axis Bank, SBI, IndusInd Bank, and the smaller names which have done really well, something like a PNB, RBL Bank, etc. So the structure is lopsided. So for now, it's a slow drift. Would be looking out for reversal signals once we start seeing a reversal in the global indices. We've outperformed the global indices by not falling as much, but we are getting into oversold zones for the whole of the globe as well. So US markets could get oversold today or tomorrow and could see some bit of a reversal. So overall, looking out for reversal on the bank Nifty.